Today we are going to cover how to thrive in the new economy. Our guest has been featured in the Fortune magazine. He is on the KC Research Next 10 list, as well as their 10-bagger club. He has attracted top investors like Rick Rule and Li Ka-shing, the richest man in all of Asia. He is the founder and CEO of Uranium Energy Corp. And the founder and chairman of Brazil Resources. Amir Adnani, thank you for joining us.
Thank you for having me.
Amir, I kind of want to start off the first one with somewhat of a haymaker question, where we kind of put you back on your heels a little bit, because you were building Uranium Energy Corp. It's now a uranium producing company, one of only 5 in the nation. And I want to recall that shortly after you announced production, maybe even within days, Fukushima happened. And I just want to go back to that moment. You're a young business builder. You accomplished something that was enormous for anyone, for any CEO of a resource company. As you know, nearly all of them do not go into production, yet UEC did. And then you have this disaster that you just can't control it. And a lot of people run into things like these and setbacks. So if we could go back to that time, you make this major announcement and then Fukushima happens. What's kind of going through your head, and what are some of the things that you focused on shortly thereafter?
Wow, I'm just going back in time trying to remember all of that. First of all, we had started initial production in late 2010, so really just about 3 months before Fukushima happened on March 11th, 2011. The time was that we were basically a few months into initial production from our Palangana mine, and March 11th was a Friday. March 14th, 2011, Monday, was actually when our first ever quarterly production results were due. And leading up to that, there was a lot of enthusiasm and excitement both on our parts to come out and show the progress we were making as an up-and-coming producer at the time, really the newest uranium producer in the U.S. in almost 7 or 8 years. Sort of the uniqueness and scarcity of being a uranium producer is part of the appeal of being in this business. But anyways, that was an important date. There was a lot of work had gone into it, not just the quarter's worth of work, but the 5 years worth of work prior to that to take this company from really concept and exploration development into that production. And so, I just looking back, like what was going through my mind is really twofold. I mean, you have to remember that the events around Fukushima, March 11th, it really initially had way more to do with the earthquake and tsunami that struck Japan and was responsible for thousands of lives that were lost as a result of it, which obviously had nothing to do with the nuclear accident. Mm-hmm. So clearly, it was just a very traumatic experience, really, just as a human being watching and seeing what's happening there in Japan and the devastation that was caused by this natural disaster, the 2 natural disasters, the odds of which happening back to back were like 1 in 1,000 when you look back at the commentary at the time. And then, of course, over the weekend is when we started to see the news start to unfold and come out more about then the damage that had happened to Fukushima and the nuclear issue around it. Dan, I mean, I think it was just a bit of obviously, it was a very flat moment for us on Monday when we put out our quarterly results, which we were very proud of because we had very low-cost production results, but it really didn't matter because including ours was cut in half on Monday, March 14, 2011. So you just looked back and it was very extraordinary circumstances, and just the timing of it vis-a-vis what we were trying to deliver was it's very difficult. But there's just so many other problems layered on top of that, puts our problems into perspective, and I think that's how we felt at the time, and even now about the whole thing.
Yeah, it's still something that lingers in the uranium market. The uranium spot price is ridiculously low, as you know, and it's caused some companies to pull back, scale production back, or not go into production with a mine. What is the state of the uranium market, and how closely does it affect UEC?
I think that when you look at the uranium market today, maybe the best way to characterize it or think of it is that it really, especially from a pricing point of view, it really feels like it's become a coil to a spring. And it's every month that goes by and prices keep falling and dropping lower. It's just the tighter this coiled spring is getting, and that's why you've had people like Rob Chang, the well-followed uranium analyst at Cantor Fitzgerald, talk about how there's violent upward moves coming in uranium prices, and it's what we see in commodities all the time historically. It's when you end up in this scenario where prices just get so low to the point that mines are being put on hold, mines are being put on care and maintenance and standby, projects are being deferred. And we're seeing that almost every week now. There's some news of that from some part of the world in the uranium business. And you just know the writing is on the wall. You just know that uranium prices right now at $28 a pound are so low. They're below the marginal cost of production. They're well below what reports suggest if prices to see uranium production come back online. Reports by the likes of JP Morgan, Macquarie have talked about incentive prices to see new mines get developed, large-scale conventional mines, around $75, $80 a pound being the incentive price. And here we are, spot prices at $28 per pound. Marginal cost of production for existing mines is probably somewhere around $35, $40 per pound. We're even below that. So this is your classic situation where prices have just fallen so low, it's uneconomic. You look at someone like Rick Rule, who's involved with our company, and he said things like, well, two things are going to happen. Either people are going to stop using uranium or prices are going to have to go back up. And with over 400 nuclear reactors operating in the world, I don't think it's a case of people stopping to use uranium. There's a fundamental demand profile and customer base for uranium. And so it goes back to that coiled spring, and that's the best way to think about the uranium situation right now. And it's taken a long time then. We're over 3 years post-Fukushima today. And I believe that even when you look back, even as far as my own expectations goes, the expectations of the uranium mining industry goes, the bigger companies in the industry, everyone has expected prices could have recovered or improved maybe a year ago, maybe a year and a half ago. But the recovery's taken longer.
Yeah. Yeah, no, for sure. And it's if you like electricity and you want to turn your lights on and watch TV or use your computer or have the internet, you've got to have uranium. You mentioned Rick Rule, and Rick Rule says that you are a force of nature. Doug Casey says you're the next great one when it comes to resource CEOs. I imagine this is both humbling, and it also sets a pretty high expectation for you. I was wondering when it comes to Doug Casey, Rick Rule, and Marika Tusa, if you could just speak on your relationship with them and how you kind of met them in the first place in the resource sector. I know it's kind of a small world, but a lot of people follow these guys on a daily basis, and these guys have given you quite an endorsement. What your thoughts on the other side when you hear things and comments that you probably heard by now coming from Rick Rule and Doug Casey regarding yourself?
Well, first of all, it's extremely humbling to have guys who are really legendary in terms of their careers and existence and persona and track record in the natural resources business be positive and endorse not just what I'm doing, but what the companies that I'm involved with. And it's not just me. We have teams at both Uranium Energy and Brazil Resources that are best at what they do. But to receive that kind of endorsement from the likes of the people you just mentioned, the Rick Rules, the Doug Caseys, et cetera, is really it's humbling. It's great. But at the same time, then, these are the types of supporters that any natural resource entrepreneur would love to have. These are the types of individuals and investors who understand the long-term nature of this business, understand inevitable cyclicality of this business, and understand that when markets are down, when uranium prices are down, when gold prices are down, these are actually the best times to grow, the best opportunities in terms of looking at assets and valuations. They're not afraid to be a contrarian and step up and sort of really get behind the management teams and companies that they really like. So it really all goes hand in hand. The entrepreneurs in the sector, people like myself, need to be able to draw the attention and support of investors like that have that contrarian approach, that are long-term in nature. And as we perform and we deliver more value and results for those shareholders, the more you continue to have their support. And I think it's just this ongoing situation and relationship where you really kind of all work together. And at the end of the day, you know how it is when you have a small business or when you're building a small company, when you have bigger aspirations. I mean, at the end of the day, Uranium Energy Corp, Brazil Resources, we're small companies. We're not an IBM yet. We're not an ExxonMobil. You need shareholders that really think and act like business owners. You own a chunk of this company, you own shares in this company, you're part of that business, and I think that's what's really key about having the backing and support of people like this. They really think like you and with you as an entrepreneur who wants to grow and create value.
Yeah, as an entrepreneur, a lot of people, especially in the business world, they'll find themselves in a difficult experience, and many of them just kind of throw in the towel, or they allow their environment to become their excuse. And I've noticed, especially with Brazil Resources and UEC, but with Brazil Resources, you launched it, I want to say in the spring of 2011, and gold, that was, I think, silver had peaked in the spring of 2011, and gold shortly thereafter. And of course, we all know what's happened to the gold exploration companies after that. A lot of people have thrown in the towel. I mean, if you could just talk on, how do you build a gold company when this headwind? Because I think a lot of people can apply that to other things and businesses in life where, I've talked to real estate investors who their best years were in 2008 when real estate was falling apart, or financial advisors who are, like Peter Schiff, for example, where his business thrived and boomed in 2008 and 2009. If you could just talk about, basically, you've been running this gold company, this gold exploration company, yet this entire time the headwinds for the junior stocks and the headwinds for the actual gold price has been quite heavy.
Well, again, it starts really with the team that we have. I mean, you look at Brazil Resources, we've got a fabulous team there. The management, the board of directors, we've got the right people on the ground in Brazil. We've got the partnership with a Sao Paulo-based merchant bank in Brazil Invest, who, really it's unique to see a junior company actually form that kind of partnership and have that kind of local sponsor and partner. Really gives you strategic access to capital, deal flow, relationships, government access. And so we should the foundation, again, around the right people, the right board members, the right shareholders, the right local partners. And with that kind of foundation, really have positioned ourselves to be opportunistic the last 2.5, 3 years, to take advantage of a very distressed, but to me, it's like being a kid in a candy store. This is a very capital-intensive business, right? And when it's as capital-intensive as exploration and mining is, you need to have those cycles and those periods where you can buy things, 10 cents on the dollar, et cetera. You need those opportunities because otherwise the amount of capital it takes to acquire assets and gather assets, if you're always paying full value, full price, it's going to take a lot of capital. So if you look at even how some of the deal making and some of the ways to be nimble and entrepreneurial has helped Uranium Energy fast track. I mean, you look at the fact that, again, we went from concept to production in 5 years. Well, we were opportunistic. In 2009, coming out of the 2008 financial crisis, uranium prices hadn't recovered yet. In fact, uranium prices were almost like a year behind the recovery curve that we saw in other metal prices. So in 2009, while uranium prices were still flat out of favor, that's when we went and cut a deal with a uranium mining company at the time, and we acquired their entire portfolio in South Texas that had a lot of synergy with the portfolio that we had, but most importantly, came with a processing plant, the Hobson plant. It's now the heart of our South Texas hub and spoke production strategy. You look at that asset on just on the books of Uranium One, which is the company we bought it from. It was a public company. That and the portfolio that we acquired from them had almost like a $98 million book value in late 2008. And in late 2009, we acquired everything for what amounted to be about $12 million in cash and stock. I mean, these types of deals are almost paramount to be able to do, because again, if you're always paying full price and you're growing these companies in an extremely capital intensive bit longer, and it can cost a lot more. And so anyways, I think when you look at the trajectory of growth at both Uranium Energy and what's being done also at Brazil Resources, some similarities. But then at the end of the day, you can acquire and gather the best assets, but you still got to be able to advance them and deliver results with those assets, right? And so that's why it's not just about being able to buy things at an attractive valuation. It's also having the team, why I emphasized that right at the get-go, having the team in place that can then advance those assets up the value curve, de-risk them appropriately, and then ultimately be able to produce and generate cash flow.
Yeah, now you're obviously a natural-born entrepreneur. I just want to know, how did you become attracted to the resource sector? Why not tech stocks, or why not some other type of private business where that never goes public? How did you find yourself building publicly traded resource companies?
I think it's a number of reasons. I mean, I just think that the natural resource business and natural resource sector really is a phenomenal way of creating wealth and making money, in the sense that this is one of the oldest industries in the world. This is an industry that we're always going to need. We're always going to need the raw material and goods that the mining industry produces. It's not the type of industry where through all of a sudden a new website gets launched and people stop using the old one and jump onto a new one and your business is wiped out. It's really, and I'm referring to maybe the technology and sort of the .com side of things. I just think that it's a bricks and mortar business. It's easy to understand, and it's one of those businesses where you really got to work hard at it, and you can get results. I kind of grew up around it, in that my father was in the commodities business, and that was some very sort of early exposure to just the idea of commodities and being around commodities. But then after that, growing up in Vancouver, going to the University of British Columbia, coming out of UBC, you find yourself in junior exploration companies more than any other city in the world. Truly, this is the epicenter. This is the Silicon Valley of junior mining. The way Silicon Valley is to technology companies. And so you also find yourself here combining all those different reasons, the natural desire to be in it, being in the right city, having the right background, having early exposure to the sector, to the commodity business. You bring it all together and those entrepreneurial juices get going, and you really feel that, this is an area to really execute and go out there and deliver value for people. And as you do, you develop a following in a city that understands and appreciates junior mining. Having said that, I find that where I've done business now for the last 9 years down in Texas, I find that it's just really comes down to jurisdiction. Like when we're down in Texas building our business, here's a state that is entrepreneurial. That you look at the tax rates, you look at how there's more Fortune 500 companies in Texas than anywhere else, the energy boom, the fact that it's the energy capital of the U.S. It's fantastic as a mining natural resource entrepreneur to really also be in the right jurisdictions, because that environment around you is also what helps lift you. So when I look at sort of how we're positioned in Texas, when I look at how we're positioned in Brazil, Dan, you look at Brazil, it's the B and BRICS countries, the amount of entrepreneurship and the amount of energy that's down there, and the emerging class and the emerging wealth that is being created amongst that country's entrepreneurs. It's inspiring being down there and seeing that. So I also think being in the mining business is as much about the environments that you're in, where you're either raising capital or developing assets. And when you look at places like Vancouver, places like Texas, places like Brazil, I also think that it's also about being in the right places and also getting more of that inspiration and energy to do a better job and to be able to advance a better company.
That's very interesting because Texas, as you probably know, since you are familiar with that state, it is seen a huge migration from the coastal states, California, New York, and people are heading to Texas because it's Texas, and of course they do have a shale boom going on right now, so the jobs are there. I want to kind of move on to the stock price of UEC lately, but before I do, because I just want to give people like an inside perspective of what it's like to run one of these publicly traded companies, but I'd like you to touch on a very important shareholder that lives in your house. You told me a great story at the Casey Summit, which is, I believe Casey only invited like 10 or 12 publicly traded CEOs. You were one of them. But you had told me a great story about a very important shareholder, and we might even be able to talk a little bit about maybe some principles that you plan on teaching them that specific shareholder later on in life. But if you could just tell the audience what we're referring to as far as an important shareholder in your house.
Are you talking about my 6-year-old son?
I am talking about that shareholder, the one who trumps all.
He was actually on my case this morning. He's really fascinated with rocks and the mining business as a result of just asking and inquiring about what Daddy does. And basically has also even learned a little bit about the idea that there's such a thing as stocks and they go up and down. And I think there was about maybe $10 or $20 worth of investment that initially he handed to me a $20 bill and basically said, buy me some of your stock. And every morning, the conversations I have with him, love you, I'm going to work. And his response would be, what's the stock doing? Is it up or down? And it really gives me a hard time when it goes down. It was just hilarious. And now he's got a rock collection then. And so he's basically out prospecting and wants to know, shows me the different rocks and asks me what I think they're potentially prospective for, what I think they're worth. And when I offer to buy it from him, he tells me or asks me if I think that price is going to, he immediately backs away and says he's not selling. I think he's gotten nervous about selling to me because he thinks that I'm going to get a good deal out of him.
That's great. Yeah, no, that is a great story. My son, just the other day, he said, Dad, we're writers. Because I've told him that I write for a living. And he goes, we're writers. And I said, I was so proud. My heart melted. I was like, yeah, we are writers. I'm like, yeah, of course I want to teach you the family business. But it seems like that your son is definitely possibly a resource executive or maybe even a geologist with his enjoyment of those rocks. I
think it's great.
Has he gotten a chance to see any of the ones that have been minted into coins? Because kids seem to love my kids have some silver coins, and I've even showed them a gold coin, and there's just a natural human fascination with gold and silver.
He has the nuggets. You'd be very impressed with his collection. He's got gold nuggets. He's got rock specimens. He's got. He's a bit of a rock junkie. He's a rock hound at the age of 6.
Well, let's touch on UEC stock price. It's been a wild ride just this last month. It's pretty a consistent stock. It has a lot of attention. You've got a lot of big insiders, big institutions, and people like Rick Rule supporting that company and part of the business. And when I look at buying businesses, I really do look at the business. For example, when I go to fill up my gas tank at ExxonMobil, I will often tell my 4-year-old son that we own part of this business. And I know people can become maybe they look at the stock price too much, but anyone who looks at a chart may ask, hey, Amir, what happened over the last 30 days? If are you allowed to comment on that?
I think overall there's a number of factors at play here. I mean, obviously, again, it goes back to the price of the commodity. We're a uranium company, so we're extremely sensitive to the price of uranium, especially because we're one of the only, if not the only, pure play uranium producer that is unhedged, and so we're extremely sensitive to the health. And fortunately, the volatility in the uranium prices this past few months have really been one way, and that one way has been on the way down. So clearly, we've seen some selling pressure on uranium energy UEC shares as a result of that. And it's been as volatile as basically seeing the stock at around $2 in early March, and then going from $2 all the way down to 95 cents 2 weeks ago, and now back at around $1.60. But I think the volatility really, number one, again, goes back to the fact that uranium prices are continuing to go down and have been soft. This, again, could reverse as we go into the second half of this year, on the back of hopefully some more positive news coming out of Japan with respect to nuclear reactor restarts in Japan, which is widely believed and expected by a lot of people in the industry and analysts to be the catalyst, the event that could get put a bit of reversal and some positive momentum into the uranium prices and then the uranium companies. So we're obviously watching that as well. But over the last 2 to 3 weeks, we've made a point also of getting out, communicating with our shareholder base, communicating the fundamentals about the company, the fact that the company really is sitting in a position where we've proactively reduced a lot of our cost structures and have cut back on spending as a way of preserving a stronger balance sheet, having financial flexibility, perhaps even looking at selling non-core assets. We have projects outside of Texas where, Texas is our hub and spoke production strategy, but outside of Texas, we're sitting on close to 20 uranium properties with resource estimates, with a tremendous amount of historic work that has been done. So another thing that we can do during a downturn is that if we're not getting full value for some of our non-core assets, we could potentially look at asset divestitures, and we've had this in mind as a way of further strengthening the balance sheet. And so getting out and communicating with our shareholders at the same time as having had a couple of bigger sellers that we had in the stock now being gone, the overlap of these effects have seen us, go and make a quick reversal from 95 cents up to where we are now. But look, even at $1.60, we're still shy of where we were at $2 around the PDAC. Our last equity financing at the end of last year was done at $2.10. And let's not even talk about where we were pre-Fukushima. But just for fun, pre-Fukushima, we were at $7.50. And we hadn't even put out any production results, and we had a third of the in-ground resources that we have today. Mm-hmm. So, fundamentally, I think you have to appreciate the fact that from a fundamental point of view, Uranium Energy Corp has spent the last, not only the last 8-9 years since inception, but even the last 3 years post-Fukushima, we've been investing in acquiring assets. We have made acquisitions that have helped grow our total acreage, total resources, historic information in our possession, decades worth of historic uranium mining and development, exploration activity, which is the company's intellectual capital, attracting big names to the company, names like Spencer Abraham, who was U.S. Secretary of Energy from 2001 to 2005. We share Spencer Abraham with companies like Occidental Petroleum, where he's the vice chairman of that company, attracting big names like Li Ka-shing, the wealthiest man in Asia, who's gotten behind us along with Rick Rule of Sprott. So, these are all things that have happened in the last 3 years that have been 3 of the toughest years the nuclear and uranium industry has had since going back to some of the nuclear problems in the late in the 80s and 90s with 3 Mile Island and Chernobyl. Like, these have been tough years for this industry. But despite these 3 tough years, just look at the fundamental progress that UEC is still making, not sitting idle, just looking at our screens wondering why uranium prices are going lower. So I think that type of some new shareholders and investors resonates with people, man. And I think if it didn't resonate, you wouldn't see the stock, pick up and rally so rapidly as it has over the last 2 weeks. But again, relative to where it's been as early as recent as March, as recent as end of last year, you still realize that we're still kind of in that depressed valuation range, in that sort of basement valuation range. But I think we're making good progress, and that's the way I see things in terms of how things have panned out in the last few months.
Yeah, it's great, Amir. This interview is really brought to my mind just moving forward even in a downtime, and I think there are definitely some principles people can take away here. I wanted to give you a quick note on the stock. My father, who's 60 years old, he bought his very first stock. He has some mutual funds and a 401k, but his very first stock he purchased was UEC, and of course it was only about a month or two ago, because he's always been against doing things outside of his retirement. I pleaded with him anyway. He finally did it. And I just think it's funny because even though obviously he's had an amazing experience from it going from about $1 to $1.60, you could say he's almost had the worst experience because he's asking me, can we just do one of these like a month?
So maybe we should put my 6-year-old and your father in touch.
Yeah. So
it seems to be very high maintenance.
Yeah. Well, Amir, thank you so much for your time, and I really appreciate you taking the time to talk about building businesses, especially in a downtime. If somebody would like to partner with you, where is the best place for them to go to learn more about either one of your companies?
Uranium Energy, that website is uraniumenergy.com. That's www.uraniumenergy.com. And Brazil Resources is www.brazilresources.com. Dang,
uraniumenergy.com. Now I gotta say, and because you're also a guy who is of the age of the internet. Basically, the internet's been around our whole lives. That is a damn good domain, Uranium Energy, because you would think that domain would have been bought up by somebody.
I was actually quite amazed 8 or 9 years ago that it was available when we got it. I think that is a good domain.
Yeah.
Hey, there you go. Add that to the list of important assets the company has.
Well, thank you so much, Amir, for your time. You have a good day.
Thank you, Daniel. Bye.